Hi everyone, good morning, good afternoon, good evening, wherever you are. Welcome to IC Market webinars. Okay, so today we changed the timing just for today only. All right, so we just wait for 1 to 2 minutes. I will start the session very soon. So today while we are waiting for you to tune in, okay, so basically today we're going to talk about Fibonacci. Okay, I think they're gonna have like 2 to 3 part for Fibonacci series. Okay, just give me a second. Okay, just okay, shall we start again? Welcome everyone to IC Market webinar. So today the topic we're going to talk about mastering Fibonacci in trading. Okay, and before I start the webinar, disclaimer first. Alright, this is marketing communication and does not contain and should not be construed as containing investment advice or an investment recommendation. Okay, the IC market, okay, IC market make no representation and assume no liability as to the accuracy or completeness of the information provided, nor any loss arising from any investment based on recommendation, forecast, or other information supplied by IC market. Okay. I want to highlight over here: risk warning, trading forex and safety carry significant risk to your capital and is not suitable for investor. Okay, so please come and join the webinar and we learn together. Okay, about myself, my name is Peggy. Some of you guys should already know me by now. If you guys new, okay, like first time joining, I have been in forex market more than 5 years. I'm a prop trader as well. Okay, so the agenda for today, okay, we're going to discuss or talking about understanding Fibonacci basics, Fibonacci tools in trading, common misconception, practical example, and live chart analysis. So at the last part, you can request if you have any instrument you want me to have a look for you, like the key level or the trade setup. Okay, so what is why Fibonacci is so important or is like very like powerful for a lot of trader. Okay, one is you can see that it can help you to identify the market trend. Okay, and also it can help you to predict future movements. Okay, and of course it's used by a professional trader for centuries to gain the insights. It also can help you to identify support and the resistance. You can use Fibonacci level, okay, to find the entry and the exit. Okay, for example, this is why it's so important. Okay, and now I'm going to talk about why you need to understand the Fibonacci frequency. Okay, the Fibonacci frequency is a series of the number where each number is the sum of the two preceding ones, starting with 0 and 1. It appears frequently in the nature. Look at this one. For example, if you were to take 1 plus 1, also 0 plus 1 equal to 1, right? And you take 1 plus 1 equal to 2, and you take 1 plus 2 equal to 3, and so on and so on. Okay, so the Fibonacci frequency is characterized by its unique properties and pattern that make it useful in the trading. Okay, now Fibonacci 2 in trading, they're gonna have like 3. Okay, I may have to adjust, which is I will go in depth in the next webinar. There will be Fibonacci retracement, extension, and this is Fibonacci projection. Okay, so I will cover or go in depth in the next few webinar. Okay, so Fibonacci retracement, so it helps you to identify potential entry and exit level based on the price swings. Okay, Fibonacci extension will project price target beyond the initial swing based on the retracement level. Okay, and Fibonacci projection is additional tool to identify support resistance and also potential reversal zone. Okay, so don't have to worry because I'm going to go in depth, I just mentioned, in the next like 2 webinars, okay, to cover Fibonacci extension and Fibonacci projection. So now I'm going to talk about Fibonacci retracement first. Okay, when you find the two Fibonacci retracement, you need to look for one swing high and swing low to identify the highest and the low point of the price swing. And that's a common level that we are using, which is 23.6%, 38.2%, 50%, 61.8%, which is the golden level. And the last retrace, which is 78.6%, are the most frequently used in the level. Entry and the exit, like I just mentioned, use level to determine potential entry and exit for the trade. How it look like. So shall we just go over to our trading wheel, okay, and then we I show you how it look like, which is over here. Okay, so if you were to look over here, let's just I make it a green chart. If you head over to the trading wheel again, just for your info, maybe some of you guys may know or may not know, IC market, okay, if you had an account with IC market, you already can trade on the trading wheel. Just connect your C trader account, okay, and then you can place the trade over here, and you can use a trading wheel like for free if you have an account with IC market. Okay, so on your left over here, okay, there's a Fibonacci retracement. Okay, so here, how are we going to draw Fibonacci? So first, you need to find where is the swing high, where is the swing low, or where is the highest point and the lower points. For example, based on H4 time frame, you need to pick the recent one. I will pick here. Okay, in this case, I want to find the level, which is the resistance in this case, right? So you need to pick from your swing high to the swing low. Okay, and in this case, Fibonacci will acting at the resistance level, so I will identify the key level. This is my resistance, and my Fibonacci, which I just mentioned, we have 23.6, 38.2, 50%, 61.8, and 78.6. okay, which is here. Okay, I think I missed one is 61.8, which is a golden level. Okay, I cannot see. Okay, right here. Okay, so if you were to look at this, if you were to draw from always, okay, starting point is very important. Starting point is always start with 100%. The ending point is always 0, and you need to draw Fibonacci from your left to your right. It's not from your right to the left. This is wrong. Okay, and you can see that my first resistance, which is for GBP JPY yesterday, anybody short at this level, is line up very closely with our 61.8%. So 61.8% is our golden level. That's why anybody short at this level, like yesterday, right? And if you were to look here, 23.6, 38.2, and 50% is invalid, right? Because price already break above. Okay, it's invalid already. The next zone you can use is 61.8 and 78.6. Okay, and then you can see that price is revert okay, and bounce off here. And what do you think about GBP JPY? Do you think that it's gonna fall from here or continue to go up trend or continue to go down trend? Anyway, okay, now so this one we're finding the resistance level. What if you want to use Fibonacci in at the support level? How? For the support level, you need to draw starting point where from your swing low or to the lower point to the highest one where swing high. I just put here, this is the swing high. Okay, so this is the highest and the lowest one. What do you see over here? 23.6 over here. Okay, and price bounce off from 23.6. okay, which is, if you want to identify the key level, this is gonna be your support level, right? This is gonna be your it's gonna be your support level. Okay, I just move up here. I make the green one, or maybe I make the white one. Okay, this is your support level. Okay, and if you want to highlight the zone, it's gonna be your support zone as price bounce off. So continue. Okay, so and now you can see that price could not, close below our, now it's become your overlap support. We combine with 23.6%, so you could identify this your support zone, okay, or area of support level. And you can see that one price is break below 23.6% invalid. Okay, and where is your next support level? It's gonna be here. If you want to see like that, are you going to pick 23, 38 or 50%? I mean here you should pick the level which is close to your key level, which is, this is my second support, and I would identify this my first support level, for example. Okay, and you just keep this 50%. Okay, so this is break below, we're not going to use that level. Okay, so now what do you see? We want to see if there is a confirmation. Okay, you want to buy at this level, but where is your resistance? This is the TP. So now I zoom for you to see again. Once price is already make the high and make the low, you can use Fibonacci, or you can draw here to find this resistance level is line up with what Fibonacci level you draw from your starting point 100%. Okay, ending point is 0. You can see that your resistance level or your sell zone, right, is line up with 50% fib level, which is like this one. If you were to buy from this is gonna be a take profit. You see confirmation, you will sell at this 50% fib. Okay, meaning like that you will get stop out, right? You can see that you will get stop out where you can see one price is break above. Let's say if you stop out, you know that this level from the resistance it become your support. That's why if you get stop out, you can buy at this pullback support level, and in 50 is invalid. Okay, any question? No question. Okay, so far so good, right? Okay, no question, continue. Okay, I forgot to show you guys if you want to use for the entry. Okay, for the entry I already told you need to identify the key level and then you combine with Fibonacci level. For the exit, okay, for example, I will identify, let's say I identify this my like support level, first support, and now I sell from this resistance. Okay, this is my sell entry, for example, entry sell, which is where? Let's say enter sell here. Okay, so this is my support level. So I want to see my support level if line up with any level, maybe 30.2% fib. Okay, exact at 30.2%. So it line really nicely, but for the sell entry over here, I will put my take profit slightly above the level because I want to make sure that price is trigger my take profit, which is like you know, okay, I identify this my support, but my take profit I target at this level. I will put like this one for my TP. Okay, I'll put it in the center. My take profits over here. Let's just say if I were to short in here, just see that. Okay, and then it's hit my take profit. That's it. So if for the sell entry, you put your take profit above the level, above the Fibonacci level. Okay, for the buy entry, you put below. Okay, you put below the level, for example. For the sell entry, for example, oh no, for the buy entry, let me look for the buy entry here, for example. Okay, this one. Okay, I draw because I want to see the Fibonacci level. I would identify, for example, okay, I already see that they have the high here and the low here, also another high here. Okay, so I will draw Fibonacci from the swing high to the swing low. Okay, based on H4 time frame. Okay, I will buy at this level because there is a divergence here. You can see a lot of rejection. So let's say I have a buy entry at this level. The first TP, okay, I'm really happy with the profit, which is at this level. This is going to be my take profit. Okay, and then you can see that it's like slightly, no, that's the wrong one. The Fibonacci, that is wrong. You need to step from this 100% starting point to swing low, or the lowest one, which is 0. You can see that 23.6%, okay, line up with my take profit. So I will put slightly below here. So meaning that if it trigger, I would have earned like 147 pip for the GBPJPY. Let's just monitor. So this is gonna be my take profit for TP1, and then it's take my take profit. So now price break above, I'm able to buy here again for pullback and then continue. But this is my take profit. The key level based on H4 time frame, which is first resistance, is right here. I draw from the left. I would identify this as my first resistance, and you can see that my take profit, which is slightly below 20.6%, and my key resistance is here, which is second resistance above. Okay, in the H1, okay, if I want to find the buy entry, okay, if I want to find the buy entry, okay, let's say there are people discriminating the IC market name. How? But I think there's so many, but it's okay. Okay, so continue. So now you know that based on H4 time frame, price come from the support level. I already buy from here. If I want to have another buy entry, where is your enter? There is gonna be your enter at this level, which is I will buy from this level. You could combine swing high, the swing low. So now we want to find support level or the buy entry from the swing low starting point and ending point, right? and then I would highlight the zone. So this is the zone. Okay, if price come hit my take profit and they make a swing high or the highest and the lowest one, if price pull back here, I'm gonna buy up. Okay, so this is my another buy entry. Okay, and we have 38.2%. okay, and I will aim for first resistance. That's gonna be my profit for this buy entry here. This is my take profit. Okay, the zone, price break below, just hold. Okay, and you see it hit your take profit, okay, at the first resistance, right? Okay, here the reason why I buy in the lower time frame, I follow the highest time frame because it's H4, right? You can see that H4 price have the sign of bounce from this level where price make a higher high, but in this one they continue to make a higher high, higher low, right? So in the lower time frame, we want to wait for the pullback, and then we want to buy to follow the H4, which is the highest one. That's why price falling, okay, we buy here and then continue to go up trend, right? So this is how you use where you place the stop loss. Okay, for example, of course, like here is the support level, and another zone which is I monitor, which is this zone. Okay, if price bounce from this one, the next one I monitor is this one. You can see price is falling, so I can have the layer. The support, the stop loss. You look here. Do you see 61.8% fib level? You see, right? This is our golden level where you put the stop loss. This is below this swing low. Okay, put this swing low because sometimes price might come to you know, clear the enter or clear the stop loss or whatever here at 61.8, so you need to put below this swing low and continue again. And then you will tell me that wow, the stop loss is like, you know, risk and reward. I think risk and reward in more than 1-to-1, but again, I'm trading based on H1 time frame. If you want to have a tight stop loss, right, you need to go on the lower time frame like M5, M15, and then you have a tight stop loss. Okay, and you can see that if I go long and this level first, this is my first entry. Okay, I will target where my entry is at this level, and then my here why I cannot adjust based on this take profit. The RR is more than 1-to-1 where my stop loss below this week, this one. My eye is more than 1-to-1. Let's say one enter is here, price falling at this level, I might have another buy entry at this level, and stop loss is the same. Okay, so at least we aim for 1-to-1, but have to keep in mind that just now I have another order here. I buy in here and then it's already closed, right? So I still have profit. You can use the profit to have another buy entry as like in a H1 time frame. Okay, so you put your stop loss based on Fibonacci level, which is below for the buy entry, and put like at the swing low right here. Okay, continue. Any questions so far, guys? Okay, and I will touch on a little bit about Fibonacci extension and Fibonacci projection, which I cover I think in the next webinar. I think it should be like next Tuesday, because Monday is live trading section. Okay, now I want to talk a little bit about extension and Fibonacci projection. Okay, like I just mentioned earlier, Fibonacci extension used to project the potential price target beyond the initial price swing. Okay, and the Fibonacci projection, it helps you to predict future price movements based on the past price swing and retracement level. And the common level for Fibonacci extension and projection is 1 to 7.2%, 161.8, and 261.8. This is more on the elite wave. Okay, again, if you want to master elite wave and harmonic pattern, you need to know how to use Fibonacci correctly. Fibonacci retracement, Fibonacci extension, and Fibonacci projection. Okay, so in the trading view, okay, for Fibonacci projection, we are still using the same, which is Fibonacci retracement. I don't want to go too much in detail. I will go in depth in the next webinar, which is Tuesday. And for Fibonacci projection tools, okay, in the trading view, if you go like over here, it will call 10 base fib extension. So we use this one for Fibonacci projection. Okay, this is the one. You can see that I have the star here, so I'm only use these tools. Okay, these tools. Okay, the rest never use, so I don't know what's that. Okay, I'll just use this only. Okay, that's good enough. And okay, the next one, I'm going to talk about the miss. Can we look at go with Fibo? Yes. Yesterday, okay, I have shot at 27.70 to 22. That is my sell zone. Okay, but I will show you after this slide. Okay, so the common misconception for Fibonacci, first you need to know it's not a magic formula. Okay, Fibonacci is a tool, not a guarantee of success. Market condition can influence its accuracy. Okay, second one, market condition is very important as well. Fibonacci level can be affected by market volatilities, news, and other factors. Combined with other analysis is very important. That's why I'm use support and resistance combined with Fibonacci level for the better level here. Okay, so now Kun Pom, right? Somebody asking me about level. Yes, but of course if you want to use Fibonacci in trading, you need to identify the key level first, and then second you combine with Fibonacci level. Not you draw Fibonacci and then you adjust the key level based on Fibonacci level. That is wrong. You need to identify the key level first, where is support, where is the resistance, and after that second one you use Fibonacci and then see whether the key level is line up with any Fibonacci level. Okay, so here how I get this entry. Price was just like that. Let's just see, like yesterday at 70. No, it was just, let's just say it's just like that. Okay, this is a Monday. Okay, so Monday I will say that I want to sell, I want to buy, I want to sell. I'm looking for sell entry, because first you need to look on the higher time frame. You need to know that last Friday's, okay, price came from your key resistance level or your swing high. This is the resistance. You look at the daily time frame here, you can see the rejection. You could combine with what other indicator, like maybe RSI or stochastic. If you want to trade with RSI, for example, you can see that price is already at overbought, right? You can see that it already almost reached 70. Okay, overbought. The stochastic as well. This is a daily time frame. You go to H4. Okay, look at H4 time frame. Do you see the price action? Do you see the price action is really lovely? This is your price action, right? So on Monday, I will looking for the, is it Monday like yesterday, looking for the sell entry. But where you're going to sell, you need to wait for price to pull back higher. Okay, so now I go to the M15. Okay, because you can see that if you didn't catch the sell from the top, okay, here, like here, you need to wait for price to pull back. But yesterday price come all the way to the support level and rising to where I was sell entry. So I was 20, no, yesterday wait, yesterday, you do want to exit or no? Yesterday, okay, I think I missed one. Is somewhere, I go to H4 first. I look for Friday, Sunday. Let's just say I think it's around at this level. Okay, the market open. I go to the lower time frame. Okay, so in the lower time frame, my entry was at this resistance level. So here I think should be last Friday or when should be Monday, like yesterday. Price pull back to this level. This is gonna be my pullback. Okay, pullback. Let's say I sell here. Okay, I sell at the overlap because price already break below the previous low here. And based on H4 time frame, there is a price action. So yesterday I just looked for the sell entry only. Okay, now where is my take profit? My take profit, of course, I know that there is have the, what is this, demand, right? So you sell here, this is take profit, right? And based on H4 time frame, I will identify the key level. So this is the level I'm waiting to buy today. Okay, I'm waiting for price to pull back, falling here. I'm gonna buy up. Okay, you can combine. You can see that. You can, what did you see? 61.8% line up really nicely, and you know that this is your demand zone because we have the bullet or the block. So you could highlight this is your zone. I will just leave it at where 61.8% fib. So this is a zone that I'm waiting to buy today. Okay, like today. Okay, and I'll sell here, take profits already. You can go even a lower time frame to look for where. Now you can draw Fibo from here to here to see that it line up with what I think should be 61.8. That is take profit. You can see that. That's why you sell here, and now the pullback you sell, that you take profit, right? In the lower time frame. Fibonacci you can draw on every time frame. Okay. Why I cannot delete this? Alright, I remove first. Okay. So this gonna, I will draw from this, right? You can see that I have 61.8% fib level. Okay, 61.8 golden. You can see this my take profit, right? You can see that. And I think yesterday price fall all the way to where? To the support level, pull back again, right? 78.6%, and now is right here. So I will do the trade setup for today again based on H1. Okay, this I will consider is my first resistance. Okay, this is the one. If you were to draw from the BD and the wick, you may like, you know, highlight the zone. Zoom to for you guys to see. We already see that the recent high is over here. This is a low, right? We'll use no, sorry, I clicked the wrong button. So you use Fibonacci from the high, the recent high to the recent low. This one should be maybe just small pullback. Oh, 38.2%. You can see that. So this is gonna be your sell zone. Okay, and where is your, you can see that this is what, this is your support level in H1, right? You can see that yesterday, that's why you sell here, then you take profit. Okay, then you can see that this level, if you were to draw from the body, usually I will see the wick I will highlight. So this is my zone. This is my zone, right? And I'm gonna take profit. You can see that price falling. Okay, if you go to the buy up here, why you buy up, you can see your price action. You see H1 time frame. Again, I'm using the IC market chart. Okay, if you using other brokers, okay, the candle is maybe different because the opening and closing is different. Okay, you can see that. And from here you buy up again. We buy, if you buy, we trade again the trend, and then you should know where you take profit. You should take profit before your first resistance. So if I say I buy second candle, you can could have earned about 100 pip for gold, right? But then price did not reach the resistance level. I'm still okay. I did not chase the market. Price did not go to the level that I'm looking for, like 48 to 27.50. So I don't have any order now for gold. Okay, I'm still waiting to buy. Now I want to combine. I will wait for my buy entry at the first support right here. That is gonna be my zone. Okay, over here I have 61.8% fib. Okay, this level. Okay, this is, if you were to look at H1, this is gonna be your sell entry, like anybody sell here, right? This is gonna be your sell entry. Anyone sell here, if you sell, and then meaning that you know how to identify the key level. In my first resistance, I refer here. Okay, and over here I can draw swing high to the swing low, 38.2 or off fib. Okay, 23.6, just small pullback, right? You can see that. That's why we short from this level. Okay, so today you look for the sell entry. Okay, that's why target here, and then I'm gonna buy at this like 27.17 to 27.25. That's around the zone, meaning that our zone is like more than 50 pips, so you need to wait for price to come in the zone and then you buy. Okay, and why I want to buy here, because I use another extension. Okay, the extension next webinar. Here also have an extension right here, and you also can draw Fibonacci from this low to this high. Okay, your starting point is 100%, ending point is 0. This one should be where you can see that 50% fib level. So we call this one Fibonacci confluence. Okay, this is a Fibonacci confluence here. So we have 50% fib and 61.8, and we have what? This lovely bullet of the block. Okay, so we're going to wait to buy at this level. Ooh. Okay, you guys can see the number. Okay, then the lowest one, this number, you guys cannot see. Is it can see? Okay, or what if I use black and then I use this white? Also cannot. Okay, maybe zoom. Okay, you guys can see right here, 27.17 to 27.25. that is around the zone. Okay, so today I'm gonna buy here if the price falling. Okay, you have the sell enter here at 27.45. you just hold your sell. Okay, on the lower time frame, H1 or M15, what do you see that? This is, if you trade on the M15, your resistance gonna be here. Then you might think you might miss the entry, like at 27.49 to 27.50. That's why it depends whether you want to trade on the higher time frame or the lower time frame. Okay, because different time frame have different level if you want to see, but you just look for the higher time frame for the direction, and then you go to the lower time frame to enter your trade. Okay, so this is our level for today. Anybody sell here, like anybody short at this level? the pullback. Why we short here? You can see there is a hidden base as well, right? You can see that. So based on H1, based on H4 time frame, you will see that this is the low. They create the new low. The momentum you think is just changing already. You could go here and continue, or maybe tonight go over here and continue to go downtrend. And if you were to look at the indicator, you can see that daily time frame is very overbought. Definitely you will see the pullback. You see the pullback. Okay, so that we see the pullback, and you see that yesterday ending with barely engulfing candle, right? You can see that here. So if you want to trade, right, I think they go down more. It can go down more. Okay. Any questions? Okay, so this is the retracement I just mentioned. You can use Fibonacci on trading stock or forex or any like different market to find a potential entry and exit point. You can use Fibonacci extension to take the profit based on projected price movements and confluence. Okay, you can combine with either you want to use MACD or you use RSI. I personally use only RSI and a little bit of the stochastic, but I'm not trading using the MACD or MACD, either one you call. Okay. Now, add one tip and strategies. Okay, so first you need to know how to look at multiple time frame analysis. Okay, applying Fibonacci to multiple time frame for more comprehensive view, which I show you guys just now. Okay, if you want to master elliott wave, okay, you can use Fibonacci, combine Fibonacci with elliott wave, okay, to identify potential trend and turning point. This is very important. If you want to master the elliott wave, you need to know how to use Fibonacci correctly. Confluence, okay, use Fibonacci in confluence with other indicator for stronger signal. I already showed you guys just now, right? And I have a Q&A and the final thoughts of this webinar. What is the key takeaway? Okay, Fibonacci can be a valuable tool for identifying the market trends and potential trading opportunities. So if you never ever trade with Fibonacci, you should start now, right now. Okay, so in year 2025, maybe you just learn how to draw Fibonacci correctly, and then you can see that your trade will get improved. Okay, practice. Okay, practice using Fibonacci on the real charts to build your skill and confidence. Okay, now you have any question? I have any question here? That's all for today. I still have like 15 minutes. We will look at the charts together. You have any question? You're welcome, ka. Okay, so shall we look at our charts together? Okay, what is happening here? Okay, first, what you need to do daily, okay, you need to know how to look at the, what is it, dollar. You will see that, yes, based on H4 or daily, there's a gap. Again, there's a misconcept or misunderstanding about gap. Okay, gapping doesn't mean that they will close the gap within a day. Okay, sometimes it will take like week or a few days to close, but based on the daily time frame, there is a gap. But where is the resistance level for H4? This is the resistance level. Now I know that this level is line up with 61.8% fib level. You see that it very nicely, so that's why you see the pullback. You can see the pullback over here. Okay, you see the pullback over here, and the support level, where look to your left when you identify the key level. This is your support, and this support level, okay, where you're going to draw Fibonacci from this high to this low, right? You draw from your where when you want to use Fibonacci level at the support level, you need to draw from your swing low to the swing high, and then you can see that this level is close to first support, which is 61.8% fib. This is your level. I think there might be a divergence here. Let's just see. Pull back RSI, you can see that there is a divergence, bullish divergence here, right? That's why price bounce up and stop or reverse at the first resistance. Where is the second resistance level for DXY? If price break above, this is your, I will draw here, second resistance level. I think tonight there is quite a high impact news, so you need to take note of that as well. If you look at the H4, okay, there's a bearish trend because look here, price make a higher high, higher low, right? It's here. There is a high, the high, the low, lower high, lower low, lower high, lower low. If the continue to go lower high, break below, pull back, become your resistance, you sell. Okay, this is the downtrend, or maybe they are in the channel. Okay, they're in the channel. We use channel instead. Okay, this is the channel. You can see that in the bearish channel line. So for the DXY, the momentum is bearish. Okay, if they break above, meaning that they're gonna pull back from the resistance, it becomes support. Okay. Oh, I delete. So the next support is here. This is gonna be your second support level. I think that will be 61 and 78.6. Yeah, you can see that this is my level. Okay, so this is my level. Second resistance I will put here. Okay, so now EU is falling from my lovely overlap resistance level here, and yesterday I was like I'll sell here because earlier Elliott wave I will show you. If you want to like master the Elliott wave, right, if you want to count the wave, I don't want to go much to it. It's really like just a simple one: wave 1, wave 2, wave 3, wave 4, and wave 5. Okay, like the wave 5 here, that's why you see the pullback. The pullback over here, you want to see that these are the high. For example, like if I want to buy at this level, okay, I know that this is my support level. You can see this is the demand, and you see that from this swing low to the high, the swing high, right? Price pull back at this level, you will see that is like up or close to maybe 50% fib, or you can see that, right? So this is gonna be my level. Okay, so now you can see that. So this is my price pulling. You're gonna buy. You're gonna buy up, right? And they break above this this high, okay, and create this another high here, which is what? Which is, you were to look to the left, this is the resistance level, gonna be, just predict they're gonna be wave 3, right? We can highlight this, the zone from the wick and the body. That's why this is how you look, right? Wave 3. We also can use the projection, we can do the extension, which is like next Tuesday. And now if I want to buy at the pullback here, like pullback here, of course where you can draw Fibonacci, where from this high, to this low. Okay, you could draw this one, but price already pull back, right? So this is a recent low and this is the high. So we're gonna pull the Fibo from where you need to pull from the low to the high. Okay, and this is 50%. No, if you know how to trade with Elliott wave, right? Wave 4 cannot retrace or go below of wave 1. So usually wave 4 will retrace 23 to 38.6% fib level. And then you can see that the wave where you can see the wave 4. You can see the rejection here at this level, right? So this is gonna be your another level here, right? Then you can see the rejection, and price break above wave 3 and complete wave 5, which is really love our overlap resistance level. And the first resistance, I think, is also close to or line up with, I'm not sure, 78.6% is here, right? You can see that I have very lovely 78.6% overlap resistance level, and I combine with Elliott wave is complete wave 5. Okay, why don't we use the 5 point at the highest swing? 5 point, this one. No, I'm talking about if I want to here. No, I'm talking about this one. The highest one is here. I'm talking about if I want to buy at this level. I remove this one first, okay? So you don't get confused. I'm talking about, okay, this is like I project, okay, this is gonna be wave 3. I'm waiting for price to pull back. The pullback here gonna be wave 4. Okay, wave 4 here. And I project this is gonna be my wave 5, which is I have 78.6%. Okay, and in this case, if price falling, let's just continue falling here. Okay, now I see that, okay, price already has the high and the low. In this case, I will use the extension. I will use the extension to see whether my first resistance or like, you know, or somehow wave 5 is close with any extension. There is no extension here, or maybe slightly above, maybe 200%. Okay, slightly above. So I'm not going to use, but what I use, I will be using the projection. I don't want to go too much detail later you guys get confused. You can see that. So I project 78.6% retracement from this high to this low. I have the 78.6% projection from this 1, 2, 3. You get this one. So I have very confident that price is going to my wave 5, and I'm going to revert at this level. Okay. Yep. So now we continue to this one. Okay, right? And of course now price already have the high, right? This is the high, this is the low. So I want to see this level should be how many percent? 50% fib. Like one, they create a swing, right? This is gonna be your support level, and we have 50% fib level here, and we could identify either this one you like support level, okay, right here. Okay, 50% fib. I put 50% here. Let's just continue, right? Now, if we to sell here, it's already take our profit. Okay, so what you're going to do now, based on H4, you need to look for the sell entry. Maybe price pull back here, and then you continue to sell. We will target here at the support level. Okay, let me do again. I find a key level for you guys. We still have 5 minutes. This is first resistance. Just now we draw already. We have 78.6%. Okay, line up really nicely. This is gonna be my sell entry. This one I will just put my second resistance, meaning that if price pull back, gonna sell. Pull back first, do sell. Okay, where you're going to target, which is here. This is my first support. There is the how many percent? You think 50. Okay, so this is gonna be my zone. Okay, so pull back first support, and the second support is where it's right here. There will be 50 and 78.6. Okay, that's it. Yes. Okay. Okay. Yeah. We just now we were talking about the small wave. You're right. Yes. Okay. So this is the one. So this is the level for the EURUSD, and the last pair I will do is the GBP. GBP. Anybody short at this level or since yesterday price come to 100% protection. Okay. This is the level I draw from this level. We could combine retracement. Okay, let's see. I identify this level, able to pick this swing high to the swing low, right? You will see that which one you should pick. I will pick 50, no, not 50, 61.8. So this was gonna be my sell zone, right? And there is 100% of protection over here. That's why you can see the price falling, and I believe there is a divergence as well. Don't forget to look for the divergence. Okay, there is a confirmation bearish divergence over here. You can see that. That's why you sell. We sell here. Okay, we sell here, and this is like small wave over here as well. Okay, so you sell here with target here, and now we have the high, we have the low. We want to look for the support. That will be 38 exact. But where is our next support level? I will pick here, and that will be 38 and 61.8, slightly above that. So if there's a big, we will highlight this, the zone. Okay. Do you guys have any question? Any question? Last pair, guys, before I end the webinars. Any? Okay, last pair before I end the webinar, guys. Okay, no question. Okay, so you can buy here for GU if you see the confirmation. Okay, here at the first support. EU pullback. If not, we buy at this level. For gold, I have okay, let me highlight the level again. This one could be like first sell, second sell entry. I will wait here if price break above, okay, but I think you may see like the pull all the way up here. We will target here first for your take profit or your support level. Okay, we have like this level and it's combined with or close to like up with 61.8%. okay, and the next support level is here. This very nice overlap support level. Okay, so here, happy Chinese New Year to you too, Ka. Yes. So today I work half day. After the webinar I will go back because I think in Singapore here we have the lunar dinner. Okay, and tomorrow and Thursday is a public holiday over here, and Fridays I'm on leave. Okay, there's no webinar on Friday, so I just take leave to just enjoy my Chinese New Year. You're welcome. Okay guys, so our second support, our here we have 61.8%. this is my, I just need to adjust the that's why I change the timing in to the morning. So basically, actually Tuesday the webinars is at like in the evening in Singapore time, like 5:30, and then I shift like early today because today we work half day. Okay, so this is the price. Okay, if price falling, you don't have the sell, that is okay, you wait for the buy entry. Okay, you can aim for like 50 to 100 pip. Okay, this is again support, but I think there is high impact news tonight. Okay, so alright guys, thank you so much for your time. Happy Chinese New Year to you all. I will catch up with you guys again next Tuesday. Okay, happy trading guys, take care, bye for now.